Guys, good evening once again. In this video, I'm going to be showing us the different market orders we have in Forex trading. So I'm going to be using the AUD for example. That's the Australian dollar versus the Canadian dollar. So I'll open trade. I'll open trade. Now, as you can see right here, if you place this down, we have market execution, we have buy limit, we have sell limit, we have buy stop, we have sell stop. Now, for the buy stop limit and the sell stop limit, I want you to ignore that. That is for more advanced setups. I don't really use it, but I will also explain what they mean for you. So, market execution, which is the very first one, is telling you that you want to buy or sell now. So, I'm going to be using all these examples on this AUD pair. Don't forget, this is a demo account that we created for the purpose of this class. So let's say I want to use market execution and I'm using one standard lot for this trade. So let's say I'm selling this market. So I'll just click on sell. Immediately I do that, you can see my trade is active. That is market execution. That means I want to sell now or I want to buy now. That is market execution. So let's go back again to the chart, the quote, we click on trade again. So now I want to show us what it means to use buy limit. Buy limit means that I want to buy the market, but I don't want it to buy now. I want to set a particular price that the market is going to buy at. So let's say you've done your analysis and maybe you've seen your structure, you've done all your confluences, your confirmations. So you're waiting for price to come back to your entry zone so you can continue the buying position, continue the buying trend. So what does that mean? Let me go to a chart example for us to be able to see what that means. Okay, let's go to a 30-minute time frame. So let's say this market has been going up and currently I'm waiting for the trade to come to this zone for me to be able to buy. So don't forget the price is currently at 97.903, but I'm waiting for price to come to 97.473 before I buy. So what am I going to do? All I have to do is just click on go back here, click on AUD trade, then I'll put in the price that I want to buy from. Let's go back and check the price again. Chart. The price I'm buying from is coming, guys. Is 97.470 for AUD JPY. 97.470. Okay, this is showing AUD JPY. Wow. Okay, let's use AUD JPY for example then. AUD JPY 97.570. So I click on trade. I put the price 97.570. Then I put my lot. Don't forget, I'm using one standard lot. Buy limit, I place it. You see that? It has left here as a pending order. So anytime price comes back to that zone, that area, then the market will trigger my buy in. So what does that mean? I'm waiting for price to come back downward into my area, then I buy. I'm sorry guys, I think we picked the wrong price. The price was 97.470. 97.470. But this is just for example purpose. Cancel. 97.470. So that is that about that. Now let's now go back to another example again. So chart. So let's say for example I want to use the next market order, the type of market order we have the sell limit. So let's say for example, that's the same way the buy limit is. I'm buying at a lower price that the market is in. So if I want to sell, it's going to be the opposite of what we did for buy. It's going to be the opposite of what we did for buy. What does that mean? If I want to sell this market, for example, if I'm going to sell this current market right now, I'll be selling from This don't. This is not a trading analysis, so don't take it as one. This is just for example. So if I'm going to be selling, I'll be selling from 97.961. 97.961. So that means that I'll come to this place, click on trade, and put it at the price at 97 point. Don't forget sell limit. We're using the sell limit 97.961. So we'll put it there with the sell limit for that. We're using a one standard lot and replace. Replace. You can see they are all orders on limit. They will only be triggered whenever price gets to that exact point that I said price should get to. Do you understand that? Now let's go back again to the next type of market order. I come to trade again. Then we have the buy stop. Now the buy stop is the opposite of the buy limit. Buy stop means that, let's go back to the chart again. The chart again. Buy stop means that what? It means price is here, but price is lower. I know price will keep going up. So I'm going to stay in the front. Let me use it like that. I will stay in the front. So whenever price gets to that front that I'm staying, price should pick my order along and keep buying. So what does that mean? It means that instead of my buys, for buy limit, I'm staying in the back. Price should come back and come and pick my order before continue going forward. But for buy stop, I'm going to wait in the front for price. So whenever it's passing by, it will just pick me along and keep going. That is what buy stop means. I hope you understand. I just try to use that example, that illustration for us to be able to understand what that is all about. So let me pick it again. For buy stop means I'll wait in the front for price. So when price is coming to the front, it's going upward, it should pick my order along and keep going upward. If it is buy limit, I'm going to wait for price in the back. It has gone forward, but it's still supposed to come to the back and come and pick my order before going forward. So I wait for price at a lower point. That is what we call a buy limit. Now the opposite is for sell stops and sell limit. For sell stop, price is supposed, let me look for a market that is in a downtrend. So we can use that as an example. This is a market in a downtrend currently. So what does that mean? It means market is supposed to be going down. Market is supposed to be going down. So if I'm using a sell limit, now note this. If I'm using a sell limit, what it means is that I'm going to wait in the back for price to come forward first and come and pick my order before going down back. I'll wait for price up, so price should come up, take my order before continue going down. If I'm using a buy stop, I know that price is going down to L, is going down, is sinking. So what I want is for price to just continue coming down. I wait for price at the down part. When it's coming down, it should just pick me and keep going down at the same time. I think this is just a basic illustration of how to explain this market orders. Now, the last thing I also want us to understand is that when placing market orders, you need to have your stop loss and take profits. Now, this is under risk management. We'll be talking mostly about that tomorrow. Please, guys, listen to this video over and over again so you can be able to grab what we're talking about. Thank you very